So you just received a 1099 DA from Coinbase, and you're wondering, is this my crypto taxes? Is this what I owe? And why does the IRS have this now? Let's walk through what Coinbase is actually reporting, what they are not reporting, and what you need to do to avoid a mismatch notice. First, here's the most important thing to understand. The purpose of the 2025 1099 DA is to report proceeds to the IRS. That's it. Coinbase is telling the IRS how much you sold on Coinbase. They're not reporting your cost basis to the IRS this year. Coinbase may show cost basis on the form, but that cost basis is for you, not the IRS. And it's only reliable if you only bought and sold entirely on Coinbase. Here's the key rule. If you transferred crypto into Coinbase from another wallet or exchange, Coinbase usually does not know what you paid for it. So your cost basis may be listed as unknown or various, or might simply be wrong. That's why average users get stuck. Coinbase reports to the IRS, but you still have to prove the cost basis and the actual gain or loss. And if you don't, the IRS's matching system can treat your proceeds like it was all profit. So let's look at an example. Imagine Coinbase reports $30,000 of proceeds, but your actual profit was only $10,000 because you originally bought that crypto for $20,000 somewhere else. If you report the correct $10,000 gain, but don't reconcile and properly structure the reporting, the IRS system can still flag you because it only sees the $30,000 proceeds from Coinbase. Here's the scarier example. Say you bought crypto for $100,000 and sold it for $80,000. That's a $20,000 loss. But if your cost basis is missing and you report it incorrectly, the IRS could treat that $80,000 proceeds as an $80,000 gain. And that's how people end up with notices claiming they owe far more than they actually do. Now here's a Coinbase specific detail we have seen. Coinbase may treat USDC in a very specific way. If you have over $10,000 of USDC sales on Coinbase, they may show it as a single line item. If you have under $10,000, it may not appear at all on the 1099 DA. That can confuse people who are trying to match totals because your internal records show USDC activity, but the form does not. It does not mean you did something wrong. It means you need to reconcile where that USDC activity belongs in your reporting. So what do you do next? Here's the correct approach. Step 1, verify the proceeds on your Coinbase 1099 DA. Step 2, reconcile your full activity across all wallets, all exchanges, so your cost basis is correct. Step 3, report your Coinbase activity on Form 8949 in a way that ties it back to the Coinbase proceeds, and separately report all other activity not on the 1099 DA. This is where software can struggle, especially if you have transfers, multiple exchanges, or DeFi activity. And that's why we tell people not to treat a 1099 DA like a complete tax report. It's not, it's an IRS proceeds report. If you want help getting this right, we can step in. We help taxpayers reconcile activity, structure reporting defensibly, and respond if the IRS sends a mismatch notice. If you received a Coinbase 1099 DA and you're not 100% confident that your cost basis is correct, pause before filing. Get guidance because the IRS is matching proceeds, whether your data is ready or not. If this video was helpful, make sure to like and subscribe and share with someone who might also have the same issue.